Good afternoon and a warm welcome to our Lunchtime Dial-In. It's great to have you with us today, whether you're listening live or catching up with the recording later. We're really looking forward to sharing the latest developments and updates for churches and Christian charities with you. And we hope that this session will be really helpful. My name is Sarah Crispin and I am a Senior Accounts Examiner at Stewardship. I will be your host today. I'm joined by three of my colleagues: Elizabeth Fennell, our Business Intelligence Manager, Archie McDowell, Head of Accounts Examination Services, and Stephen Matthews, Senior Consultant. I'm also really delighted to be able to welcome a guest panellist, Paul Roberts, who is the Head of Employment at Keeley's Solicitors, and we look forward to hearing his expert advice later in the session. Following feedback from our previous dial-in events, and thank you so much for those who've taken the time to complete our surveys, as far as possible, we'll be turning our cameras on when presenting so that you can see our smiling faces. Sometimes this does cause connectivity issues, so in that case, the presenter may stay hidden from view. For those of you who are new with us, our mission at Stewardship is to transform generosity by inspiring greater generosity, making giving count, and strengthening Christian causes. These lunchtime dial-ins are just one of the ways that we aim to support and strengthen our church and Christian charity partners. If you're interested in finding out more about the ways that we can support your church or charity, you can check out all our services and resources on our website, or do feel free to call our church and charity team because they would love to speak to you. The number is on your screen now, and it will also be sent out in the follow-up email later today. If you'd like to make sure that you receive the follow-up materials, including the recording, you'll need to ensure that you're signed up to the dial-in mailing list. If you haven't done so yet, please email us to find out how, and we'll send you a link. So today we'll be covering the following agenda items. Firstly, the key findings from our Stewardship Generosity Report 2025. Then looking at Labour's changes to employment law and the main challenges for churches and charities. Be prepared, a new charity SORP is on the way. And finally, employment. Where do churches most commonly get it wrong? We'll follow with our usual Q&A session at the end, so please do bring your questions on today's topic. If you have questions today, please use the chat function to ask them. We'll answer as many as we can in the time that we have together. If you haven't joined us before, the instructions are on the screen now. But before we get started on our agenda, let's just briefly pray. Heavenly Father, we thank you for this time that we have together to update our knowledge and strengthen our Christian causes. We thank you for each organisation that's represented here today, and we pray that what is shared will give insight, knowledge and confidence, and that we will be good witnesses for you in our work and our communities. In Jesus' name, amen. So first up, we have Elizabeth, who's going to talk about the findings of the 2025 Stewardship Generosity Report. Elizabeth.
Great, thank you so much, Sarah. So hi, my name is Elizabeth Fennell and I am the Business Intelligence Manager here at Stewardship. As you may be aware, we recently launched our Stewardship Generosity Report 2025, which is the second report of its kind. The aim of the report is to equip people with information about what drives and what hinders generosity for Christians in the UK. We recognise that there was a gap in knowledge in this area and we wanted to provide something useful for churches and charities. So today I want to highlight three key findings from the 2025 report and then invite you to explore the rest of the report yourself. So firstly, we found that committed Christians who are identified in this report as those who attend church and read the Bible at least once a week give almost 5 times the UK average. So they give on average £314 a month, which equates to 11.2% of their income after tax. So not included in this slide, but important to note is that this is £249 more than the £65 a month that was reported by the Charities Aid Foundation in their 2024 UK Giving Report. So what we found is that the depth of Christian practice demonstrated by an individual has significant impact on their levels of generosity. So as this slide shows, proportion of monthly income given directly relates to depth of Christian practice. So as I've already stated, committed Christians are those who attend church and read their Bible weekly. Practicing Christians are those who attend church and read their Bible monthly. Church-going Christians are those who attend church monthly but do not read the Bible monthly. and cultural Christians do not attend church at least once a month. So as you can see, the depth of practice correlates clearly with the proportion of income given, which shows us how important discipleship is when it comes to generosity. So to help further understand motivations around giving, we looked at 7 key findings in this year's research. For my second point, I want to highlight one of these and then allow you to explore the rest in your own time. So we're going to be looking at finding 7, Christians are more likely to give to their church than any other cause. So 93% of those who attend church regularly, so the committed, practicing, and church-going Christians, give regularly to their church. So that's far beyond giving to Christian charities, which was 82% of that group, or secular charities, which is 71% of that group. That giving is mirrored in a higher level of trust in churches. So 73% of those who attend church regularly report that they trust the church a lot, compared to only 50% for Christian charities and 27% secular charities. So this demonstrates the unique role that the church plays in an individual giver's life, and therefore the responsibility they have to wield that influence wisely. In many of our interviews, the role of the church in influencing an individual's perspective and understanding of generosity and their giving was a consistent theme. For example, the report quotes a woman named Deborah, who shares that she gives through her church to other causes, and she says, quote, "The church supports good missions and charities, so I trust the church's decision," end quote. The church has a really important role to play, therefore, not only as a cause to be given to, but as a vehicle through which givers can learn about and engage with other charities and their work. My third point is that our youngest age category, age 18 to 24, gives the highest proportion of their income at 10.63%. So that's 2.5 more percent than those aged 25 to 34, and over 3 times the proportion given by those over 65 years old. 80% of the 18 to 24 group give regularly to their church, making it the most popular cause type they choose to support. The amount they give is also significant. They have an average gift of £98 just to the church, which is the highest value among all age groups. By contrast, those aged between 55 to 64 give an average of £50 to all causes combined. And as you can see, for all causes combined, the number for 18 to 24 is £262 a month, which is quite astounding. I'm sure you'll agree. This group is also almost twice as likely to be a committed Christian than any other age group, which further supports the finding that a more engaged practice leads to greater generosity. So that was a whistle-stop tour, and I hope it encouraged you to download the report for yourself and to digest all the findings and what they imply for giving in the UK. At the end of the report, we also provide a series of recommendations and resources for you to help you get started on how this research could inspire and shape your work. The follow-up email that was mentioned from the session will contain a link to the full report as well, and a blog outlining the key findings and what they mean for you. There is also the option to provide feedback and help shape the 2026 version of this report. Our goal is to make this research as useful for you as possible, so your feedback is truly invaluable. Thank you so much for your time today, and please do reach out if you have any questions. Thank you so much. Back to you, Sarah.
Thank you, Elizabeth. That was a really great introduction to that report. So for our second item today, I'm delighted to welcome Paul Roberts, whose expertise as Head of Employment at Keeley Solicitors has been incredibly helpful to Stewardship over the years. He is going to talk about Labour's changes to employment law and how that might impact your church or charity. Paul.
Thank you very much, Sarah. Yes, Labour's changes to employment law. I've been practicing in employment law for 25 years now, and this is the biggest change to employment law that I've seen during my career. They're contained in the Employment Rights Bill, which is currently working its way through the parliamentary process. And the bill is quite broad brush. There's a lot of detail that's still going to need to be worked out. So what the government are planning to do, once the bill has worked its way through Parliament and become an act of Parliament, they will consult about that detail, and then they will produce regulations that will put flesh on the bones. And then eventually this will be implemented in 2026. So we've got plenty of time, first of all, for the government to figure out what the detail is going to be, and then for us to figure out what we need to do as a result. But the biggest change is going to be around unfair dismissal. The current position, as I'm sure you are aware, is that employees usually have to be employed for 2 years before they can claim unfair dismissal. So within that period of time, to put it bluntly, you don't have to necessarily have any particular reason to terminate someone's employment, and you don't have to follow any process. That is all going to change. The headline is that unfair dismissal will become a day one right. Now, like a lot of things in life, and especially in legislation, it's going to be a bit more complicated than that. Because the government is talking about having an initial period of employment, effectively a probationary period. And this isn't in the bill, but the suggestion is that this will be 9 months. And then on top of that, you can then give someone 3 months notice. So potentially someone could be employed for up to a year under this concept of an initial period of employment. And within that period, you can terminate their employment if you can show that their dismissal is for capability or qualifications, conduct, illegality, or some other substantial reason relating to the employee. But also, you will have to still follow some sort of process in that initial period. We don't know what that will be. The regulations will set that out in due course, but it will be some sort of light touch process. So not the full process that one would have to go to at the moment for someone with 2 years service to avoid a claim for unfair dismissal. Now on the next slide, I've tried to summarize how that actually works in practice. So during the first 9 months, with what I call this sort of skimmed process, this light touch process that you can follow if you're dismissing someone due to conduct, capability, illegality, or some other substantial reason relating to the employee. After 9 months, or at any time if you're making someone redundant or the dismissal is for some other substantial reason not relating to the employee, you have to follow what I would call the full fact process that we will be familiar with at the moment. So that's a rough summary of how that's going to work, but we're going to need much more detail from the government in due course. And that will require you probably to update your contracts around probationary periods, update all your processes that could result in someone's employment ending, such as a disciplinary procedure, for example. But you can't do that yet because we don't yet have the detail to do that. Once we get that, we'd be very happy to help you get your house in order so you're ready for the new legislation in 2026. The next change to flag up is changes to statutory sick pay. Currently, employees aren't entitled to statutory sick pay at all for the first 3 days, which are known as waiting days. Those days are going to go, and so employees will be eligible for statutory sick pay from day one of their absence. Another requirement for statutory sick pay is that you need to be earning at least £123 a week. That's going to go as well. And someone pointed out that could mean that low earners end up more when they're off sick than when they're at work, which would of course be crazy. So they're going to introduce a new lower rate for low earners, which will be between 60 and 80% of their pay, we think. Again, that's yet to be defined. And finally, the other major change you'll have seen in the media is changes to 0 hours contracts. Now, the headline here was that these were being abolished. Again, it's actually a lot more complicated than that. At the heart of this concept is a new idea called a guaranteed hours offer. And this will apply both to people on 0 hours contracts and what will be defined as low hours workers. And yet again, the bill doesn't define exactly what a low hours worker will be. That will come in legislation. but we think it could be someone working possibly less than a day a week, so someone who just works a few hours a week. This will then work on the basis of a reference period. Again, we're not sure how long that will be, but the suggestion is it could be 12 weeks. And the essential concept is that you look at how many hours someone has worked during that 12-week reference period and how regular those hours have been. And if they've worked regular hours, you then have to make a guaranteed hours offer to them, which must reflect the hours they've worked during their reference period. So it gives them more certainty rather than being completely vulnerable to their hours fluctuating and possibly going down to zero. They then have more certainty if they accept that guaranteed hours offer going forward. And then at the end of the next 12-week period, you have to make another guaranteed hours offer based on the hours in that period. And so the idea is that potentially there could almost be a ratchet effect. So somebody's hours and the extent to which they're guaranteed could increase month by month and even year by year. If you don't do that, a worker could claim for the pay they've lost as a result of not having a guaranteed hours contract subject to a cap. And finally, on 0 hours contracts, you will have in future to give employees or 0 hours workers reasonable notice of their shifts and reasonable notice of the cancellation of their shifts or changes to them. The bill is extremely complicated around 0 hours contracts, and that's even before we get the new regulations that will put the flesh on the bones. I'm quite sceptical about how many 0 hours workers are going to be in a position to enforce these rights, given how complicated they are, but time will tell. And if you're using 0 hours contracts, again, once we've got more detail, we'll be very happy to get your house in order. So for now, I'll hand back to Sarah.
Thank you, Paul. That was a helpful introduction. And if you'd like to find out more on this, we'll be including a link to a longer webinar that Paul has conducted on this subject. So don't forget to be typing your questions into the chat and we'll pick up on those later. But first, now Archie is going to update us on the new Charities SORP, which is coming soon.
Thank you, Sarah. Good afternoon, everyone. A new Charities SORP is on the way. So, what does that mean? Well, to answer that question, I think we need to remind ourselves of what the Charities SORP is. The SORP, or the Statement of Recommended Practice to give it its full title, is a document which supplements other accounting standards and sets out how particular sectors should interpret and comply with those standards. The Charities SORP therefore gives guidance on how charities should interpret and comply with FRS 102, which is the financial reporting standard applicable in the United Kingdom. The important point to note here is that the SORP is saying how FRS 102 will relate to charities. The SORP is not an accounting standard in itself, so the SORP can't contradict what FRS 102 says. During 2024, FRS 102 was reviewed and some changes were made which will come into force for accounting periods beginning on or after 1st January 2026. And as a result of these changes to FRS 102, the Charities SORP will also have to be updated. It's expected that a draft of the updated SORP will be issued later this month or shortly thereafter, with the final version being released towards the end of this year. There is, however, some preparation that charities should begin to do as soon as possible so that they are ready for the new SORP when it's released. Before looking at what that preparation might be, we should of course stress that this will only apply to those charities who prepare accrual accounts. If you prepare receipts and payments accounts, then you do not need to do anything differently. Unless, of course, you might be required to prepare accrual accounts in the future. So, What are the changes? And more importantly, how should charities prepare for those changes? The two main areas which will change are the requirements around lease accounting and also around revenue recognition. Let's look first at lease accounting. As you may be aware, there are currently two forms of lease: operating leases and finance leases. And in very broad terms, operating lease payments are treated as expenditure, while finance leases are capitalised on the balance sheet. Under the new SORP, that distinction will disappear, and most leases will appear on the balance sheet as an asset and as a corresponding liability. So to prepare for this change, now is the time to gather together as much information as possible on all leases. How long will they run for? Is there a break clause? What's the notice period? And what's the total value? Charity trustees will also need to consider if there might be other implications of this change. Could it mean that the audit threshold is breached? Remember that in addition to the income threshold, there is also an asset threshold of £3.26 million, and this refers to the total value of the assets before the deduction of any liabilities. Or perhaps if the charity has borrowing from a bank in place, the bank might have covenants which set out the maximum value of liabilities which the charity might be allowed to incur. So a few things to think about there. And now we turn to the other major change that I mentioned, revenue recognition. This will probably affect charities which receive income from contracts or performance-related grants. The ways in which such income is recognised in the accounts, and in particular, the timing of the income over the period of the contract or the grant may change. The effect will vary from charity to charity, depending on the exact nature of the contract or the grant. But any church or charity which receives income from performance-related grants or contracts should be looking out to the terms and conditions now, so that all the information is to hand when the time comes. As I said, it's the timing of the income recognition which will change. So again, this might affect charities with income levels close to the audit threshold. This time, the income threshold rather than the asset figure. While leases and income recognition are the main changes in FRS 102 which will affect charities, there are also changes around heritage assets and income from non-exchange transactions. That's income from such things as goods donated to charity shops, for example, donated services and facilities, and income from legacies. And it's also worth mentioning that we've had to be vague around the precise requirements of the new SORP, as the draft hasn't been published yet, so we don't have the full details. But this is a subject that we will be returning to in future dial-ins as more detail becomes available. So watch this space. Thank you.
Thank you, Archie. And as Archie just said, we will keep you updated with developments in future dial-in events. And there's also a blog on our website about the new SORP, and a link to that will be included in the follow-up email. So finally, we welcome back Paul Roberts. While we have him with us, we thought you might find it helpful to have an employment lawyer's view on where churches most commonly get things wrong, and he's kindly agreed to share his expertise. So Paul, back to you.
Thank you, Sarah. Yes, well, I'll try and distill 25 years of experience into 3 bullet points, which in summary are being too nice, being too informal, and being too generous. Being too nice. As well as acting for lots of churches and Christian charities, I act for a lot of secular companies as well. And in my experience, most managers are nice people. But what that means is they don't like having difficult conversations with their employees. And in the church context, whoever the managers find it even more difficult because they often feel it's unchristian to have a difficult conversation with an employee and let them know, for example, that their performance isn't up to scratch. But what happens in my experience is often then the performance isn't addressed. Of course, it carries on being poor until eventually the manager or the pastor or the vicar's patience snaps, and perhaps they suddenly terminate the employee's employment, at which point we could be facing a claim for unfair dismissal. That's not good for the church or the charity, but nor is it good for the employee, because if they were never told they were performing poorly, they had no chance to address their performance. So often what we feel is when we're trying to be nice to someone or be Christian to someone, actually long term, we may not be really helping them at all. And there is, some truth to the saying that sometimes we need to be cruel to be kind. So I'd be wary of being too nice. I think that relates also to being too informal, because if we do start to address any issues that we have, often we tend to do it in a very informal way in a Christian charity or a church. Now, there's nothing wrong with that initially. HR professionals, in my experience, sometimes go to the other extreme and they reach too quickly for a formal process. So there's nothing wrong with starting something off informally. But if it doesn't work, we can't just keep carrying on an informal process. There comes a point when we need to make it more formal. That will hopefully mean that the employee recognises that we are taking this seriously and gets the message through to them if necessary. But it also means if eventually we do end up terminating their employment, we'll have a much better chance of defending a claim for unfair dismissal. Because whether it's on grounds of disciplinary, poor attendance, poor performance, or redundancy, there is a process that the law expects you to go through. And it's no excuse if you're in front of an employment tribunal to say, well, we're a church or we're a Christian charity. This just isn't the way we like to do things. That will cut very little ice with a employment tribunal who will normally be coming at this from a secular background. At the moment, you can get away with that to some extent in the first 2 years when someone can't claim unfair dismissal. But as we've seen, from 2026, employees will be able to claim unfair dismissal from day one. So that will become all the more important. And even under this light touch process, we will have to follow some sort of formal process before we terminate anyone's employment from 2026. So beware of being too informal. And finally, beware of being too generous. I'll give you a couple of examples of what I mean. First of all, let's imagine you've got a dear old lady in the church who cleans the church once a week. And she's been doing this for years on a voluntary basis. And you're very grateful. And you're aware that she is perhaps a bit strapped for cash. And so you start paying her £50 a week out of the collection in return for her cleaning. The minute you do that, in reality, she's no longer a volunteer. She is an employee, with all the implications that entails. There are implications in terms of tax and national insurance and her employment rights. There's also implications in terms of the national minimum wage and whether this £50 is actually sufficient to cover the national minimum wage. And I've seen quite a few churches get themselves into hot water in that sort of situation. Now, if you want to pay her, that's absolutely fine. But you then need to offer her an employment contract and comply with all the formalities that entails, rather than just fudging it and risk creating all sorts of problems for yourselves. I'll give you another example, if you like, at the other end of the spectrum. Let's imagine you're a prosperous church with a minister leaving the church, retiring perhaps, having served the church for many years and seen it become very successful. You want to bless the minister and give them some sort of financial gift when they're departing. You need to be able to show that is an appropriate use of the charity's funds. And there aren't necessarily hard and fast rules about that, but you could potentially be scrutinised by the Charities Commission in making sure that you have used charitable funds appropriately. So that again is a potential trap you could fall into in terms of being too generous. So those are just 3 brief examples of where, in my experience, churches and Christian charities most commonly go wrong. I will now hand back again to Sarah.
Thank you, Paul. That was really helpful. And that brings us to the end of our agenda for today. Just a reminder, please do keep putting any questions that you have in the chat, and we will get onto those in a minute. As mentioned at the beginning of the session, there are many ways that we aim to help churches and charities navigate their governance responsibility. 2 of particular interest for this audience are our consultancy helpline. For an affordable annual subscription, you can ask your questions at any time on a range of topics, and one of our consultants will be on hand to support you. And also our resources section on our website, where you will find mostly free resources, including all of our briefing papers on a variety of topics, as well as blogs on current issues. An example of this is our recent blog on how charities can protect themselves from fraud, and this followed the recent guidance from the Charity Commission, and we'll also send a link to this in our follow-up email. If we didn't get to your question, then please do check out the resource links in the follow-up email, or if you're signed up to the consultancy helpline, please feel free to make use of that as well, especially if you have something that's quite specific to your church or charity. Also included in the follow-up email will be a very brief survey that should take no more than 3 minutes to complete. We really appreciate hearing from you, and your feedback and comments are always reviewed to improve our events. If you haven't responded for a while, please do take the time to let us know what we're doing well, and also if there's anything else that you'd like us to include. We do really appreciate your time and your comments. Our next dial-in will be on Thursday, the 12th of June, 2025. So put it in your diary. We hope you'll be able to join us, and feel free to pass on the invitation to anyone else you know who may be interested. Finally, a big thank you to our guest, Paul Roberts, and our panelists, Elizabeth, Archie, and Stephen, for sharing their expertise and for answering your questions. And thank you to all of you for joining us today. We hope the rest of your day is good, and we'll continue to pray for you and your organisations that you'll be equipped to serve faithfully and to be a blessing to those that you serve over the coming months. Thank you very much.